Hello everyone. In this video, we will start working with the sales journal. As always, I strongly recommend that you download and print the worksheets published for this lecture so you can follow along with the video and practice using a sales journal. It is very important to remember that a sales journal can only be used to record sales on account. The journal entry that is made on the sales journal is a debit to accounts receivable, a credit to sales tax payable, and a credit to sales. Any other transaction simply will not fit on a sales journal and must be recorded in the general journal or on one of the other special journals. Wine Country Gift Shop sells cards, supplies, and various holiday gift items. In this exercise, we will record 6 sales-related transactions shown at the top of your sales journal. All sales are subject to sales tax of 8%. The shop uses a sales journal and a general journal. We can assume all sales are on account unless specified otherwise. Let's also assume that the year is 2018. Let's begin. On February 3rd, we sold Joel Bennett a box of holiday greeting cards for $75 plus sales tax of $6 on sales slip 201. The amount of the sale is $75. In addition to that $75, we need to also collect $6 sales tax from Joel. Accordingly, the full amount Joel owes us is $81. So we need to debit accounts receivable for $81, credit sales tax payable for $6, credit sales for $75. Enter the date, February 3rd. Sales slip number 201. Customer name. Joel Bennett. We'll skip the posting reference column for now. Enter the debit to accounts receivable of $81, the credit to sales tax payable of $6, and a credit to sales, $75. On February 10th, we sold a Valentine's Day party pack to Ken Hamlet for $200 plus sales tax of $16 on sales slip number 202. Let's enter this transaction on the sales journal. Date, February 10th. Sales slip number 202. Customer name, Ken Hamlet. Debit accounts receivable, $216. Credit sales tax payable, $16. Credit sales, $200. Remember that the debit to accounts receivable is always for the total amount the customer owes us, the sales amount plus the sales tax amount. Let's record the next transaction. Date, February 13th. Sales slip 203, customer Vicki Neal. Accounts receivable debit, $324. Sales tax payable credit, $24. Sales credit, $300. Let's look carefully at the next transaction. On February 16th, we gave Vicki Neal an allowance because of incomplete items in 2 gift packs that she purchased from us on February 13th. In other words, the merchandise we sold her was faulty, and we agreed to reduce the price we charged her by $54, which includes a reduction in sales tax of $4. To record this transaction, we will need to debit sales returns and allowances for $50, sales tax payable for $4, and credit accounts receivable for $54. Ask yourself this important question. Is this a sale of merchandise on credit? The answer is no. Therefore, this transaction cannot be recorded on the sales journal. We'll need to record the transaction in the general journal instead. Turning to the general journal, we can record this business transaction as follows. Date, February 16th. Sales returns and allowances. Debit, $50. We'll skip the posting reference for now. Sales tax payable. Debit, $4. Accounts receivable. Credit, $54. Then we need to enter a description for this transaction. Credit memo number 101 issued to Vicki for incomplete gift packs. Something on that order. Going back to our transactions, the next 2 transactions are sales on account. Accordingly, they should be entered on the sales journal. February 26th, sales slip number 204. Customer name is Amy Pelosa. Debit accounts receivable, $432. Credit sales tax payable, $32. Credit sales, $400. February 28th, sales slip number 205. Customer name, Gordon Dunn. Debit accounts receivable, $162. Credit sales tax payable, $12. Credit sales, $150. Once the sales journal is complete, we need to calculate the totals for the accounts receivable debit column, the sales tax payable credit column, and the sales credit column. The date should be the last day of the month, February 28th. Put the word totals in the customer name column and sum or add up the debit column and the two credit columns. The total of accounts receivable debit column is $1,215. The total of the sales tax payable credit column is $90. The total of the sales credit column is $1,125. Pause this video if your totals don't agree so that you will have time to find and fix any errors you might have made. Okay, now that we have finished recording the sales transactions for the month of February into the sales journal and totaled up our columns, we need to check to see if we're in balance. Do debits equal credits? Do the two credit amounts equal the debit amount? Let's check. The two credit amounts of $90 plus $1,125 do equal $1,215. So credits equal debits and our sales journal is in balance. That's the end of this video. In the next video, we'll practice posting debits and credits to the general ledger and to individual customers' accounts in the accounts receivable subsidiary ledger. We'll also see how to use posting reference columns. See you next time.